Hey everyone, so some information on the Trump tax plan. Um, there are currently 7 tax brackets and they're going to be compressed down into 4. So singles, anyone making up to 45,000 will now pay 12%, and between 45 and 200,000, 25%, between 200 and 500,000, 35%, and anything over that, 39.6%. And for married, up to 90,000 will pay 12%, up to 260,000, 25%, and then between that and $1 million, 35%, and then anything above that, 39.6%, which I personally think is crazy. That 39.6%, that's known. I don't think anyone should pay more than 25% income tax. This is insane. I mean, you work hard. That's punishing hard work. Anyways, the corporate tax rate will drop from 35% to 20%. And then then here, a lot of people get to take advantage of deducting what they pay in state and local taxes. But those deductions will go away, and high tax states, especially in the Northeast, that's not going to go over well because that's a loss in income, that deduction. The interest that businesses pay on debt will now be capped at 30% of earnings before interest, taxes, and depreciation. We'll go over the mortgage interest shortly. Personal exemptions are going to be repealed, no more of that. The National Federation of Independent Businesses, which represents small businesses, is against this plan. The National Association of Home Builders and the National Association of Realtors are also against this plan, which I'll explain more later. But manufacturers, retailers, and wholesalers are for this plan. So what this plan entails is $300 billion in individual income tax reductions, $172 billion in cut to the estate tax, and then over $1 trillion in tax cuts for businesses. The budget blueprint allows for a maximum of $1.5 trillion in tax cuts over the next 10 years. Basically, they're increasing the deficit $1.5 trillion. This plan also repeals deductions for medical expenses. So if any households have high medical expenses, they're no longer going to be able to deduct those. Now, new home purchases, currently the mortgage interest deduction is allowable for loans up to $1 million. But if this plan passes, that'll be cut in half to $500,000, and it'll be retroactive to the Friday that just passed on November 3rd. But existing home loans will be grandfathered in. Now, tax-exempt bonds are no longer going to be allowed to build sports stadiums. Corporations generally will not have to pay taxes on active foreign income. They will have to pay a maximum of 10% on their income of their foreign subsidiaries. The child credit is going to be expanded from $1,000 to $1,600. The tax credit for electric cars, which is up to $7,500, that completely goes out. So we know Elon Musk of Tesla is having heart palpitations right now. Now back to the home builders. They represent 1/6 of the economy, and so Jerry Howard, the CEO of the National Home Builders Association, is saying basically this is going to cause a housing recession and cause home values to plummet because of that mortgage interest deduction dropping from loans of $1 million to $500,000. There's several ramifications from that. people that currently own homes in that price range, they're not going to want to refinance either, because if they refinance, then they're not grandfathered in anymore, and then their allowable deduction drops from a loan of $1 million down to $500,000. So not only will they not want to sell their home, but they're not going to want to refinance, so they're going to be kind of stuck. And the standard deduction is going to be doubled. Married couples, it goes up to $24,400, and half of that for singles. This, well, currently 21% of taxpayers use the mortgage interest deduction as a deduction, but that'll drop to only 4% of taxpayers, and those will be the real high income earners in the Northeast, because the standard deduction, they're going to use that instead of itemizing their deductions. Some people will say, oh, well, that's no big deal, I'm still going to get a tax break, but the only problem is that's going to take a lot of incentive away on buying homes, which could help further cause home prices to drop. Also, that's at a bad time when interest rates are going up, so this is going to be a double whammy. Another change, second homes, you're no longer going to be able to deduct the interest, the mortgage interest. Also, the property tax deduction is now going to be capped at $10,000. There are 3.7 million households in America that pay more than $10,000 a year in property taxes, so that's going to affect a lot of people, especially in states like New Jersey, where 30% of homeowners pay more than $10,000 in property taxes. And then also, currently, the capital gains deduction, when you sell a home, if you've held it for 2 years or more, you can profit up to $250,000. The first $250,000 you don't have to pay tax on, and for married people that's $500,000. But for high income earners, that is singles earning over $250,000 or couples earning over $500,000, they no longer get to benefit from that. They will have to pay taxes on all profits. So that's another thing that'll further constrain them from wanting to sell a home or move to another one. So, like Jerry Howard, the CEO of National Home Builders Association, this could cause a housing recession. But anyways, that's just some information, and have a good day.